Okay, so in this session, we are going to look at Learning Unit 7, which is Debtors and Creditors Control. Now, what makes this learning unit different to what we've done so far is in this learning unit, we are delving into a bit more detail regarding your debtors and creditors. In Learning Unit 2, we learned what is a debtor, what is a creditor, and we learned when to debit or credit your debtors and creditors account when we talked about the accounting equation. Then under the journal entries, when we focused on the credit journals, we also looked at the debtors and creditors journals and how to record them in your journals. Now, this learning unit does not affect anything that we've learned in Learning Unit 2 or Learning Unit 5. This just builds on it. So what we are going to do now in this learning unit is instead of doing the journals, which shows the details for all your debtors and all your creditors, we are now looking at an individual debtor or creditor and their specific statement, so that when your debtor comes to you, you can tell them at any point in time how much they owe you. Okay, so this is what this learning unit is about in a nutshell. So if we look at debtors, debtors are also known as accounts receivable or receivables. Now let's quickly just recap what is a debtor again. A debtor is people or business who owes our business money. Why do they owe us money? Because we sold something to them. So we generally sell a product to them, and then for that reason they actually owe us money. Now what needs to happen is we need to keep individual accounts of all of our debtors, so that we are able to provide a statement to each debtor and collect our money at the end of the day. Now the journal shows the totals at each month of what all our debtors have spent in our business. But we need to be able to pull up a specific debtor summary of transactions across all journals. So what we want to do is we want to know for one individual debtor, what is your transactions for a specific month or for a specific date range. And that is where your debtors ledgers come in. This allows us to draw up an individual statement per your debtor. Okay? So this is what happens. The journal still happens in the background, but what we are doing now is we're taking the information from the journals, and over and above the journals, we then go populate our debtors ledgers, which shows the individual transactions for each and every debtor per month. Okay, now on pages 213 to 215 in your textbooks, they've got a summary. So make sure that you know how the layout works and what each and every column is. But let's quickly look at the summary. So this is what an individual debtors account would look like. So you can see here, we've got the debtors ledger. We say who is our company. Then we have an individual debtor's name and the individual debtor's code. We've got a column that is the date. So this is when the transactions happen. Then we've got the coding. Now, not all companies use the coding, but in your textbook, they use the coding. So we've got a code system as well. Then your document number is your source document. And the number here is the source document number. Now, the first one is the balance brought forward. What is very important here is to note that there is no debit and no credit amounts shown for the opening balances. We only show the balance in the beginning. For every other line item that occurred during the month, we show what document was issued, the document number. So similar to what we've done now, where we said it's an original or duplicate credit invoice, here you would say invoice, put the invoice number. Then the folio column shows what journal did we take this information from. So is it our debtors journal? Is it our cash book receipts? And then the number behind it is which month did it come out of. Now, if we're busy with the debtors, everything that happens in the debit column would increase our debtors balance. So it is something that we sold to them. Whereas everything that happens on the credit side is either a payment or a return by our creditors. And then what happens is you take this opening balance, so the balance in the previous line item, you add any debit, you subtract any credits to get to your new balance amount. Now what is very important, to work out the correct balance, your transactions need to be in date order. So you cannot mishmash them and just do it as you subtract the information. It needs to follow in date order to make sure that you get the correct balances. Otherwise, some of the transactions where they just say that you have to, that they made a payment or partial payment, you will not have the correct balance after that if you did not follow the date order. Now, if we look at the creditors account, the creditor is exactly, or accounts payable, as it's known, is exactly the same as your debtors. It looks exactly the same. The only difference is it is the opposite direction. So creditors increase on your credit side and they decrease on your debit side. So that is why it's very important when you read a question in the exam or in the test that you make sure, are you busy with a debtor or are you busy with a creditor? Because it doesn't matter which side you put the entry. Now creditors, just to refresh your mind or memory from learning unit 2, is people that our business owe money to because we bought something from them. So creditors is someone we owe money to because we've purchased something from them. We also need to keep individual account for each creditor so that we can see how much we owe them and so that we can query anything on the accounts they send us. So a creditor's ledger helps us do this. So if we do not keep a record of how much we owe each creditor, we will not identify any errors they make or any additional charges they put on our account that does not actually relate to us. The journals are still done exactly the same as it is what you've learned in Learning Unit 5. This is just over and above the journals. We then put in the ledger more detail for each and every individual creditor. Now the layout you can find on page 218 to 219 of your textbooks. Let's quickly look at what does the layout look like. So for an individual creditor, you'll see the layout is exactly the same as a debtor's account, except we say creditors ledger, the company name. Then we've got our creditor and the number behind it would differ from your debtor. The format is exactly the same. However, anything that increases our creditor's account would happen on the credit side. Anything that decreases it would happen on the debit side. Okay, so as you can see, all the information that you would capture is exactly the same as it would be if you had data. Okay, so nothing has changed. Everything looks exactly the same. Okay. So do you guys have any questions on debtors and creditors journals before we take a break?